Buenos días. Funciona todo, creo. Buenos días, gracias a todos en nombre de Nordea AM por estar aquí hoy con nosotros en este evento de inversión responsable. En nombre de Nordea pues estamos varias personas. Mi nombre es Lorenzo González. Habréis visto en la entrada a Alberto y a Raúl. Dentro están mis compañeras Ana Rosa Castro, Carolina González, Cristian Balteo. Y hoy con nosotros también tenemos a la responsable de la oficina, Laura Doncela. Gracias por venir a este evento de algo que consideramos que realmente es muy importante a día de hoy. El tema de la inversión responsable no es que lo consideremos nosotros, sino que si lo miráis por distintas formas, distintos medios, veréis, por ejemplo, que si os metéis en Bloomberg y buscáis dentro del sector financiero prácticamente la palabra Esg, nos encontramos que en los últimos 5 años se
we have multiplied by 10 the number of searches of this world. If we look at those searches, they normally came from developed countries, but there are many others outside of the traditional ones in Asia, China, India, and Africa, like Nigeria, South Africa, which are adding to those queries. But if we go to economic and financial tools like Bloomberg, you will find that the number of news about ESG exceed 25,000 per month, which is much more than the news that we have about the Federal Reserve or the Central European Bank. Another one of the main pillars of these tools was inflation. Inflation represents less than half of the news that are published compared to the amount of criteria, ESG criteria that are published. So there is a huge appetite. In the last survey that was organized for investors 1.5 years ago, they were asking the global investors, in the last 5 years, how has your vision changed regarding responsible investment? Are you taking that more into account? And 70% to a greater or lesser extent are saying that yes, they are taking it into account. And from that group, 60% were asked, and are you incorporating that into your portfolios? And to a greater or lesser extent, they said yes. So the respondents seem to have appetite. There is a thematic approach now, and there is something that we have to explore and something that we have to develop. If we take into account the responsible investment principles that you see more and more companies joining them, and more entities are implementing them. 40% of investments and issues correspond to these 17 development goals of the United Nations. But we still have a lot of regulations to develop. From 1996, we have gone from around 10 initiatives, legislative initiatives, to more than 400. And even though we have not been able to clarify, to set some homogeneous criteria or strict criteria, to some extent, some kind of regulation that we can use or that we can take into account at global level. So there's still a long way to go. There's a lot to do, and that's where we come in, Nordea Asset Management. We want to make our contribution to this clarification, and we want to disseminate the knowledge about our experiences, because in our motto, we say that ESG is part of our Nordic DNA, but that is not a motto. In order to have a robust culture, you need a society that really believes in those principles, and there can be no more responsible society than the Nordic one. So at Nordea Asset Management, we say we have been one of the first signatories of the responsible investment principles of the European Union, but we are also members of the group of the 100 more sustainable countries at worldwide level. And we can also say that we have a responsible investment team that is one of the most extensive in Europe, that has been awarded many prizes all over Europe, and that we agree and we implement all the international agreements on human rights, and good corporate governance of the OCDE, and so on and so forth. But we are part of initiatives like ROCIF, ENG, the agreement for the action against climate change. But all that would be useless if it was not supported, if that culture is not supported by the full management of the company if we don't have the backing of our management. And I can tell you that since 2007, we have a Responsible Investment Committee that is led by the CEO of the managers of Nordea Asset Management. So it is really a cross-sectional, a transversal approach that we have implemented in Nordea, and that is reflected in our management, in our range of funds that we have discussed every now and then. The range of funds that we have traditionally comply with some robust criteria about corporate culture, not just exclusion lists, negative filters, screenings. We are also talking about engagement, proxy voting, and we also making available ESG criteria. We make them available to our customers, so for them to use. And we have the STARS range. We focus specifically on fixed income and equities, but always looking for excellence and trying to implement those principles. That would be the best in the best. But we continue to evolve, and we are launching thematic ranges that focus on specific criteria, like, for example, the one that you know about the climate change, and recently the one that we launched about gender equality or listed global infrastructures. I'm not going to be the speaker. I'm just delivering an introduction. There will be two people speaking today. We will have Marjo Koivisto, who is the co-responsible person for the Department of ESG in Nordea Asset Management. She has worked for the World Investment Bank, the International Monetary Forum, and she will give us an idea about how we understand those concepts. And then we will have T.D. Roost, which is in charge of fixed income department of Nordea Asset Management, and he is part of the consultant body of the body that developed the sustainable development principles of the United Nations. If you have any doubts, please just raise your hand and ask them, because it will be necessary for you to use a microphone, because we need a translation of your companies. So, Mario, tienes la palabra.
Thank you very much. Thank you very much, Laura and Lorenzo and team here in Madrid. It's great to be part of the event here today. Although I'm realizing that I'm actually between you and lunch, and I wonder if this is an opportunity to influence your lunch decisions toward a more sustainable direction. And I don't mean vegetarian, so let's see what happens. But more specifically, today I'm here to talk about three things. I wanted to share a little bit about our ESG journey at Nordea Asset Management, talk about our capabilities in terms of how do we do what we do, in terms of bringing environmental, social, and governance standards into our investment activity. I wanted to share with you how we go from, especially as a Nordic asset manager, from having environmental, social, and governance values and taking that to our valuation. And finally, I want to give you some examples of what we've learned from engaging business on sustainability matters. We're globally invested, and as part of our responsible investment approach, we take a lot of care to have this dialogue about how ESG issues become material, financially material, but also potentially reputationally material for a business. But let's start from where it all started. For many of us here in the room, but also for us. When we signed the United Nations Principles for Responsible Investment in 2007, it was early days. There were only about 250 adapters and about 10 trillion assets under management within what you could broadly call sustainable or responsible strategies. And of course, today that number in terms of signatories of the UNPRI is 10 times of what it was back then. And at the same time, of course, we have a significant increase in asset under management. And that's quite exciting from many perspectives. Most recent addition to this is that many investors are also starting to see and wanting to see impact really for, in addition to financial return for their investments. And And in fact, that market nowadays, according to the Global Network for Impact Investment, is around $500 billion in capital committed, which is a pretty significant advance over the past over 10 years. For us, the UNPRI is, of course, one part of our commitment to responsible investment. The other side of the story has to do with the fact that the market's now moved to thinking about responsibility within the UN Sustainable Development Goal terms. And what do I mean by that is that if you imagine, for instance, in a country that I used to work in for a long time in America, in the United States, there has been sort of philanthropic giving for a long time, and there has been foundations that committed to, for instance, community programs or cleaner infrastructure programs and so on and so forth. But what's really changed in the landscape of investments is that with the UN Sustainable Development Goals having been brought to market, there's a real sense that private capital and capital that seeks a specific ROI will be mainly and critically responsible for developing and delivering on these UN Sustainable Development Goals. And I think that's a really great development because these goals cannot be met with public capital and concessionary finance only. How does that capital move into these Sustainable Development Goals? Well, there we have to sort of walk back to the history of responsible investment a little bit. I think the first element of responsible investment approaches is always that investors will use their rights as shareholders and their position of ownership to engage business on sustainability goals and material factors. And I think early on, and I'll share here a little bit of Swedish history in terms of responsible investments. In the 80s already, pension funds in Sweden were asking that asset managers would bring sustainability values into their practice and to their investment activity. And often what happened initially, of course, in the 80s was that this resulted in these screens of the investment universe, so negative screening. So this idea that you take a sector that a certain group of investors doesn't have a particular appetite for, or it looks like on a values basis or on a valuation basis that sector will never become sustainable. So at that, you kind of screen that sector out of your investment universe. I think that was a really important part of the development of responsible investments, but that's not enough. And for us, in fact, it's never quite been enough. But instead, we think that we want to find ways in which the investment activity can move the business to understand better their environmental risks or their social risks or the risks of poor governance, help that given company that we're invested in or even a sovereign that we're invested in understand how they can mitigate that risk, how they can mitigate that to increase economic efficiency of the business or of the sovereign, and how they can actually mitigate also reputational risk that comes from being in the global market where investors and consumers are increasingly concerned with sustainability questions. And that's what we call investments with ESG integration, and that's our thinking around sort of impact of responsible investments, is that we're able to engage our investments on their journey towards sustainability. So what we've done is we've gone into, and let me see if my pointer works. Here it is. We've gone beyond exclusionary screening all the way to more systematic and explicit inclusion of these financially material ESG factors into our investment analysis and investment decisions. And then we select companies or sectors that have either the opportunity or are existing in best performance in ESG terms in particular sector over their industry peers. So we do have a very specific style of best-in-class approach that you might have heard of. And then finally, 2019 is very different from when we started out, which was around sort of 2007 and 2008, in terms of how sustainability is a market trend. And if you think about it, what's different this year, right? I mean, in the past few years, for instance, renewable energy costs and the unit cost of renewable energy, like solar energy, for instance, is finally pretty much at par in some markets with conventional sources of energy. That's quite a new economic phenomenon. There's changes in consumer demand in the types of consumer products, but also industrial products that there is a market for, and those markets are evolving, and there are companies and also companies that are developing products and services for those types of markets. So the sustainability theme, so to speak, is in the market. It's in the economy, and that allows us to be even more excited about finding those opportunities and those companies that are going to be winners in those markets as they grow. And then finally, I've added a little line here on impact investing, because that's a very important new trend. Of course, it's always been the case, and I already said that for us, we've always sought to engage companies to try and help them think through how they can mitigate the environmental risk, for instance, in order to build more environmentally friendly business models, or at least avoid the type of environmental exposure that is also ultimately challenging for their business activities. But with impact investing, we can go a step further. We can really, especially with the SDGs becoming a little bit more quantified and target-driven, we can start setting certain targets and goals of impact. So net positive impact on people and planet, that just like financial targets, we can keep tracking as part of our investment activity. So it's a really, really promising development that is largely allowed, in fact, by the improvement within data and the improvement also of investors' understanding of what the impact of business, what ESG is really for economies and for societies. A little bit about Nordea Group. We are the largest financial group within Northern Europe. We have Nordea Asset Management. We have investment teams based in Stockholm and in Copenhagen, but we have offices across, obviously, the Nordics, and then beyond, including here in Madrid, but also globally. We are amongst the 100 most sustainable companies in the world, and we have really taken an effort in the sustainability approach across our different financial businesses. So we started with asset management. This is where it all started for us, actually. But since 2016, we went into the whole of Nordea Group and established a sustainable finance practice that has integration into different business lines. So whether it's investment banking, whether it's personal banking, wealth management, and beyond. So we are a relatively sizable group of professionals, today about 30 to 35, in fact, since we're growing, within sustainable and responsible investments. A little bit about how do we then actually operationalize all of these principles before I go a little deeper into that. Just like for any new development in finance, sustainability as part of financial decision-making and investment decision-making is a journey, and it has been a journey for us as well, and it continues to be a journey, and we seek to improve and develop and get better. But we were early movers in the sense that, for instance, our global climate and environment strategy that invests in companies that have particularly climate positive business models was launched already in 2008, and that's, of course, you can see that the market was very different in 2008 than it is in 2019. So it's been a great part of our sustainability journey, that fund. We launched our STARS funds, and I'll tell you a little bit more about these STARS in a minute, but already in 2011. And what actually is quite interesting, and especially to a former world banker like myself, is that the first strategy was in emerging markets. So and you might wonder that, well, why emerging markets? Because are there so many incredibly sustainable companies in those markets? But we'll come to that, because our position really is that the role of the investor is to be part of the sustainability journey of the company. And we help with, through our engagement practice, with the risk mitigation on these environmental social governance issues. We made ESG data in 2013 already available to all of our portfolio managers. And we've gotten a little bit stricter on the sectoral investable universe in sustainability terms, and I'll tell more about that as well, since 2015. Today we're at a point where we started with equities and sort of long-only equity ESG integrated funds, STARS funds. But I'm very proud to share that we have also ESG integrated fixed income strategies today, and my colleague Ted Hust is here today to tell you a little bit more about that. And of course our journey continues, so I would say watch this space. We try and walk the talk, and many of you read the news about greenwashing when it comes to responsible investments, and it's something that we're incredibly aware of because for many reasons. One thing is that we are in this for real, and we try and find ways in which we collaborate also with our peers and other investors to advance the agendas that we think in terms of sustainability are critical. So either material, so that we want to manage the risk exposure that we have in terms of ESG risk, or that we want to work on norms and global norms that might be violated by the investments that we have, and then pool together and maybe have more capital behind us as well in some cases to address issues such as CO2 emissions by the largest global energy companies, such as in the Climate Action 100 and Plus initiative here, or for instance within the SASB, which is the Sustainable Accounting Standards Board started by Michael Bloomberg. Really establish corporate and investor dialogue between what issues are the most material to your business model from all of this ESG risk that is out there. Because of course it's a space that is not so standardized as, for instance, financial information is standardized. It's not required to be reported by the regulators in the same way as financial information is. And SASB really is an effort to identify and structure and establish a standard of ESG risk that is material to business on a sectoral basis. So we found it very important to be part of that conversation. And in fact, we were founding members of the investor advisory group of SASB in 2016, on which I sit today. So there's lots of things that we seek to do. So to sum up and maybe give you kind of a high level of where we are today, we were an early mover when it comes to the responsible investment space. We do have also commitment from the top for this style of investing, and it's expanding. So our CEO, Nils Blomstrand, in fact, chairs the Responsible Investment Committee that makes decisions that have material implications for all of our holdings. And for the whole of our investable universe. We've developed strategies that seek to really get to returns with impact. I'll say more about that. And then, of course, we try and be as transparent in terms of these activities that we possibly can, and we report on our activities as well in quite a bit of detail. So what do I mean that my colleague and my CEO, Nils, is really involved in all of this? Well, so this Responsible Investments Committee that we have, that he chairs, basically sets the tone of these corporate level responsible investments overlays. And what that means is that, for instance, we have a corporate level exclusion list, exclusion filters that has implications for about 37 billion euros of our AUM. So it's quite a significant impact that these corporate level exclusions have an impact on. We also do norm-based screening that apply to all of our actively managed funds. And then we also have this very specific, what we think, because we continue to enhance this approach, is a top-in-class ESG integrated long-only approach, which is the STAR strategy. And then we also have a real commitment to trying to build out strategies based on these sustainability trends that I mentioned already. And of course, the climate strategy is one great example of it, but as you can see, there are some good other ones. If you want to see how we vote, because part of the active ownership, it's not reducible to proxy voting, but it's one critical part of it. We make it transparent. So on our website, we have how we voted in AGMs on the side of the management, against the management, in given annual general meetings. And what's interesting is that you can filter this by sector. So here we have industrials, where we voted. We vote in over 500 meetings a year. And you can see the specific votes that we casted. On these exclusions, and it's not an easy thing, and I would certainly stress that for us, exclusion is really the last approach. It's not really the way in which we would do environmental, social governance, information integration into investment decisions. We prefer to do it at a more bottom-up level mostly, but this exclusion filter sometimes is very important. And for instance, we don't have the appetite for certain types of business activity. So I mentioned that in 2015 we had we made a decision to get even stricter in terms of coal mining, in terms of not investing across our actively managed funds into companies that have revenues in excess of 30% in coal. We have a revenue-based way of establishing the exclusion threshold. And what I mean by that is that we analyze in quite a bit of detail our investment universe to see where we will be kind of hit when we establish the exclusion. So there's quite a bit of research that goes into making these decisions. We also don't invest in illegal nuclear weapons and a number of other sectors where we don't think that these business models are sustainable. And we think also that because of regulatory, economic, technological shifts in the economy, those are some of the factors that are driving the unsustainability. And some of it is that we don't have the appetite for certain type of business models. Here's a bit of a controversial thing, maybe, perhaps, but I find it fantastic and interesting that we do this, is that we publish the list of companies that we don't invest in. So you can, and some of them you can wonder why not in this, like why not invest, for instance, in, well, I mean, the font is too small, apologies, but in one of these companies, let's say Boeing, which is on our list. And again, it goes back to the revenue assumption, right? I mean, certain companies, even if the majority of their business is in sectors that we are comfortable with, they might have a business segment that goes under our exclusion list target. So then they are out. They also might be in breach of international norms. And we first try and engage companies to try and see, okay, are they following international norms, and are they taking that into account when they're making CapEx decisions, OpEx decisions, when they're looking at their business model? But if there's no real intent or real pragmatic progress toward resolving a breach of international norms, they might end up on our exclusion list. So watch this page as well. It's quite important for us. Who does all of this work? I think that's an important question as well. And here I have the opportunity to brag about my amazing team. So I hope you'll allow me that opportunity. And I should say that, of course, we are, as Responsible Investments, only part of Nordea Asset Management's effort in responsible investments. In fact, it's the whole of the company. It's really something that is so deeply in our DNA as an asset manager that I feel quite comfortable saying that the spirit is spread across our different portfolio management teams, our distribution, and many other colleagues. So it's not just us, but you know, here's who you get a deeper look into, and you get to be a little bit more acquainted with today. So Katarina Hammar and I, we co-head the team. Today we have 9 analysts, soon 10, and actually we're expanding out to 14 this year. So we're an ever-growing team. We're one of the largest teams in Europe, and by that definition, I think in the world potentially, because Responsible Investments has really started off here in Europe in a lot of ways. We also have a proxy voting and corporate governance team, and I shared already what they do, my colleagues Erik and Jan. And on our team, we do 3 different kinds of things. So we are ESG analysts on those STARS funds that I mentioned before, and I'll tell you more about it. We also have an engagement force. That's part of a cluster of our team, which is where we do the company engagements and we engage business on sustainability. And then we also have a new part of the team, which is ESG Quant. And what I mean by this is that this space of investments is the data is getting, part of it is getting better. And then also there is so much information that you need to be able to kind of normalize and structure into the investment context that we needed to step up and hire data scientists and actually grow the team in that way. So that's been a very exciting part of our activities this year. What the team has been responsible for is our proprietary ESG risk scoring model, of which you have a version here. And relative to the external data vendors that many of you maybe know, let's say MSCI, Sustainalytics, there are many others. I would say that our proprietary risk scoring approach is perhaps a little bit more forward-looking, because in terms of the ESG risk, we put a little bit more weight on the business model and how that is looking in sustainability terms than just on the operational risk exposure in environmental terms, for instance, and on the risk management. So we are a little bit more forward-looking, perhaps, in our risk scoring and our ESG scoring than perhaps others. And this takes me to the STARS concept. I mentioned this before. So what is that? This is the top of our ESG fund range, and it has a very specific history that is already 8 years old. It started there in emerging markets, and today it's expanded globally. We have funds invested in different global markets that my colleagues will share a little bit more about today. Well, what is it all about? It's about the fact that we only invest in companies that live up to Nordea's ESG standards. And what that means is that we take that proprietary model that I shared before, and we only invested in the top quality companies by that scoring model. And for us, it's A's and B's per that model that we have. You might wonder why also B's, but it's part of our value proposition within the STARS fund to try and create lasting impact by taking the engagement element to the next level. So we try and engage the company to manage that risk better. When our investment horizon is about 3 to 5 years or a little bit longer in the equity universe, we're able to do that, and we're able to be part of that transition journey with the business. And maybe the final one is that we don't move the goalpost. All of our STARS funds have regular market benchmarks. They don't actually have ESG benchmarks. And what we try and do is that we try and use the ESG integration. So basically the ESG analyst scores the same business on ESG risk as the fundamental analyst has a view to that from a valuation perspective. And they kind of put their hands together, which then gives a good sense of what the risk exposure is within that business. Why do we think that this STARS model is best practice? I already touched on the elements, but I want to stress on this, because imagine a situation where you have a fundamental analyst making an investment case, taking maybe 2 or 3 weeks, 1 or 2 weeks, basically building a really, really good case to present to the PM. And then you have an ESG analyst on a completely separated team somewhere on the other part of the house, coming in and at that end of that 2 weeks saying that, nope, absolutely not, this is not actually something that can go in this fund. That, to us, is a very inefficient investment research process. We find that that's very limited information sharing about that given position, that given company that we're looking to invest in. So why not have those two analysts collaborate from the beginning? So for us, on the STARS fund, one of my team members, who is an ESG analyst, sits next to the fundamental analyst and the PM, and they collaborate together on the investment case. So you have two brains looking at the same investment case from two angles, and then that actually gives us the desired transparency and information sharing that you need. And then the ESG issues actually get flagged much earlier in the process. It's really, really important. So you can imagine that when the fundamental analyst is thinking about the strategic position or the moat or the expectation gap in the market, they can already take into account if there is major reputational risk within that business. They can also already think that, well, it doesn't look like this sustainable or this business model is particularly sustainable. Is this company actually really thinking about managing their capex or R&D or their kind of operational expenditure well enough to try and position themselves to be a winner, a sustainability winner in the next 2 to 5 years? And if not, then maybe it shouldn't be a stars company. And we're quite comfortable making those kind of calls and excluding companies out of these portfolios. What we do then once we've, and I'm actually realizing that I might be running out of time, so I'm skipping a few slides, but what we do then in that process of investment research is that we share all the notes on Bloomberg, so in a place that is not public, but it's dedicated to our investment teams. So then the ESG scorecard, as well as the engagement meeting minutes, because I'll share a little bit more about the engagement in a minute. They're shared in Bloomberg, so the portfolio management can actually see all of this. And that's really important because timely sharing of this information, as you can imagine, really can impact investment decision making and portfolio management. And I'll give you an example of this here, which is that that we had been doing quite a bit of research on the S. So we deem a company's data management and data privacy approach as part of the social aspect of environmental, social, and governance information. So we've been doing a lot of research on how some of the TMT sector was getting prepared for the GDPR regulation, and specifically looking at holdings within our global stars and North American stars. So in our North American portfolios, we did a trip that was part of our thematic engagement to the US. We went to DC. And we tried to understand how do the think tanks in the city think that that the technology sector and large US tech is actually preparing for GDPR, which was starting in Europe, of course, but a lot of like global, Silicon Valley companies, of course, a lot of operations as well as consumers globally. We specifically looked at Facebook. And we sought to engage the company, so we reached out to the management to understand what their governance procedures for data privacy were, how were they going to put in place processes that would handle the oncoming of GDPR so that they could respond to all of the requests that consumers might have. And during this time, I mean, the company was a holding in our Global Stars Fund. So this was part of our STARS sort of ESG financially material engagements. The Cambridge Analytica scandal that many of you might know broke out, and this was actually immediately, we were already coming to a decision where we felt that the company responses weren't up to the standard that we would have been expecting, and we were ready to hit the brake, so to speak, on Facebook in our Global Stars Fund. And ultimately we did. There was no adequate response to the queries that we had about their GDPR management practices, and we used that opportunity to, I told you about the ABC proprietary grading of companies, so we downgraded Facebook to a C, and that was our team's decision as part of the STARS Fund, which then immediately made the company non-investable in any of our STARS funds, and that's, today it's just under 7 billion. Euro. So it's a relatively sizable decision, and you can imagine how much Facebook gives of a certain global benchmark and so on. So it is a big decision. And what this meant is that the portfolio manager had to divest out of the position within 30 business days, and without improvement in GDPR and data privacy management policies that would have been ratified by us, it could not be reinvested again. And the point is that actually during this period, so in the early 2018, in the first and the second quarter, the consensus view on Facebook was still very positive. So the market was bidding up the stock, but we had these concerns. And And then, of course, as the scandal, Cambridge Analytica scandal broke down, we saw depreciation in the price. And for us, this was obviously ultimately in consequence of that depreciation, both a financially important decision that we ended up making, but also very much in line with what we expect of sustainable business models. So ESG and financial performance go hand in hand. The reason I raised that research example of Facebook is that sometimes there are things that happen in the market where ESG risk becomes incredibly timely. So that's why it's also good that the ESG analyst sits together with the fundamental analyst and the portfolio manager. But there's also other more norm-based and more structural environmental social governance issues that we know that we have exposure to. They might not break out. There might not be an incident this month or this quarter, but there might be one in 3 months. And these sort of norm-based engagements are equally important to us. You might have been following, for instance, some of the Brazilian wildfires. You might have been following what happened to the mining sector when it came to some of the tailing dam challenges that sector was going through. All of those issues are important to us, and we try and prioritize our time. Of course, we can't engage on everything, but those two examples are great examples of how we engage also on longer-term ESG issues. And now, since I'm running a little bit out of time, I want to give you more company-based examples of things that we do, and really just an engagement example of that is very close to our team's heart this year. So 2 examples. We also, within our new fixed income funds, we were invested in the global textile sector. And we started to see that in fact there were some challenges with the sustainability of some of the core business models in this textile sector in the past years. And some of the key challenges have to do with the fact that the volume of global textile production has almost doubled since the early 2010s. And part of this is due to consumer demand and this desire for fast fashion. And how that is supplied, of course, is that many global textile companies have their supply chain that is a very global supply chain, but also especially within markets where living standards are starting to improve and workers specifically are starting to request higher wages. So within Southeast Asia and some of the great and the major production countries for textile industry, in Bangladesh, in Vietnam, in countries of that region, minimum wages have been going up, albeit from a very low level, at about 80% over the past 6 years now, and that's a major uptick. And if you think about companies that are volume businesses, so if it's textile industry, that type of minimum wage increase can add to your total cost of goods sold anywhere between 7 to 20%. This is based on what we calculated. So of course, you want to be as a business also ahead of that type of social challenge that might be happening. But then also, in our view, it's important to have the type of worker management and the type of factory management programs that are aligned with advancing the sustainable development goals. So it's both an economic issue for the textile industry, but it's also a sustainability issue for the world. So we engaged a number of companies to try and help them understand how they might themselves add some more foresight into their cost management when it came to wage management. And this has been a big engagement topic for us this year. And in fact, we published a white paper that all of you, I invite you to read if you have the time. And then second example here is that is the cyber preparedness. And I mentioned the example that we think that data privacy and data security is actually a very important social and sustainability standard for the technology sector. But of course, as we know, it's not just the technology sector that is digitizing today. It's banking, it's manufacturing, it's hotels and leisure, it's everything. Everything is digitizing. So you can just imagine the rate at which some of the data privacy, but then also the cybersecurity challenges emerge and how they grow for many industries, and especially legacy industries, especially those that have systems that are not probably full in place yet for managing this wealth of digitization. So we've initiated a cybersecurity engagement, and we're looking at how much, from an economic point of view, value at risk certain industries might have if they don't manage their cyber readiness and their cyber preparedness well. And then on the other hand, making sure that we are working toward more sustainable industry standards. And in fact, I realized that the SDG that I've listed here is certainly not clean water, but it's actually SDG number 9, which is about the digitization of industries and the better innovation that industries can have. So with that, the last slide that I have for you today is, and before I hand over to my colleague Tere, I wanted to share how you can kind of get involved and hear more about these engagements that we've done, whether it's the textile industry, the engagement that I mentioned, or whether it's something else. To our clients, we share the quarterly engagement stories in the STARS funds. Every time that we engage a company, we will share what is the sort of KPI that we had in mind when we decided to engage, and where do we think we're making progress with the business. In addition to that, we of course report on our funds. So we try and be as transparent as we can. So we report on our carbon footprint of our investments. So you can see that on our website. And we also give a sense of the SDG exposure of the investment activity in these STARS funds. So much more to tell you, but I'll have to finish here. Thank you so much for your time.
¿Alguna pregunta?
Any questions?
In front of lunch, I'm certainly standing in front of lunch, so I will do my best to stick to around 20 minutes and let you know what we do in Emerging Markets Debt. I'm the head of the Emerging Markets Debt team, the internal Nordea Emerging Markets Debt team. I'm a German national. I lived 20 years in Germany, the first 20 years of my life. And then I left, and my parents thought I went all over the place. So I stayed in 13 countries, of them being South Africa, China, and the one that raises most eyebrows is I also worked in Afghanistan, in Kabul, in a post-conflict private equity fund. That was in 2007, and that was actually the first time that I was exposed to investing and doing financially well, but also having a sort of impact agenda and trying to support a society, which in this case was Afghanistan. So, and for me, a circle is closing, and it's actually great now to have greater leverage and bring actually SDG alignment, ESG investing, sustainability into sort of mainstream asset classes. I mean, emerging markets debt is still a bit niche sometimes, but it becomes one of the mainstream asset classes. And I will start off with showing you, and I realize it's now super small, what is called the Country Overshoot Day. It's actually a day when we collectively, as people, depleted our planet from the resources that the planet can absorb. So basically, the shorter the date is, the earlier we've used all the resources of the planet. And let's not go into details on how the methodology is or whether it's great or not, and there's certain flaws in it, but let's just accept how it is to share a little bit on the background on emerging markets. So the Earth Overshoot Day is on the 29th of July. So that is the moment basically when we collectively depleted the Earth of our resources. Now what we did is we used a portfolio, a global benchmark, so a global bond benchmark, which would include US Treasuries, Japanese bond, and all the European debt, basically. And then we calculated and weighted that according to, took it as an average country, average Earth. And then you see that for global sovereign debt, it's actually the 8th of April. If you could see the individual countries, the big drag here would be the US, basically. That is a key component. Now, if you move to Euroland, actually you start moving this day out, you're actually doing much better in relation to a global benchmark. So that would be the 8th of May. And now, most interestingly, the EM Debt Index, and that's the MBIC diversified, so that's the hard currency index, would have the 27th of June. So that tells a little bit about the sort of the mindset that we maybe have towards emerging markets, that ESG and sustainability doesn't fit there. It also tells us collectively what the challenge is. Probably the challenge in the, let's say, US-driven indices is, how do we transition out of the ways that we've developed into new ways? How do we transition out of coal and other more polluting ways of producing energy into cleaner solutions? Whereas in the emerging markets universe, it's also much more about how do we bypass that whole trajectory? How do we actually make sure that we're developing there more sustainable? And that is kind of the backdrop that we as emerging markets debt team want to operate in. We would be dragged off the stage from sales if I wouldn't mention our products. I mean, we have 5 products, but what is really important here is that we run enhanced index products and active with sustainable. So what that means is we've really taken it into the core of our team. It's basically you have up to probably 175 to 100 solutions out there in emerging markets debt, and we thought, okay, what is it actually that we want to bring to the table? What is it that we want to be known for, and what is our purpose? And there we established that this is emerging markets debt with sustainability. So we want to be absolutely at the forefront of it. And you will also later in the presentation see on the example of Brazil what I mean with that. And basically it also means that it may not be for everybody, because this is really right at the edge of it in terms of fixed income, sovereign investing and corporate investing. But that is at the core of what we do. And it also means that, for instance, our total return product is not managed differently. I mean, I always give the example of Venezuela. Venezuela, we would probably very quickly agree on that is not a very sustainable government bond holding. So we would certainly not have it in our emerging market stars product, but we would also not include it in our total return product. We believe there should be a completeness and authenticity, and that also has to do with that our activities over the long term are supposed to generate alpha, so create value basically. So that is the rationale for us. So you find a aligned product offering. And the reason why I keep on stressing that is because I do think that is important. I do think it is important that it does make a difference in terms of, do you really bring it at your core of what you do, or are you just launching another type of product, which is an ESG product? Now, what I also find important is, I mean, this is now the complete team, and what I find important are the little logos. I mean, I'm super happy and very grateful that we have the responsible investment team, and indeed that we mean it as Nordea and putting all the resources to work at this. But we also need to have PMs, risk takers, practitioners that control the portfolios being involved in this journey. And that is why you see, at least you see with me as head of the team, this little UNPRI logo. You see it the same with N. This is basically our involvement. I'm also a member of the Fixed Income Advisory Group at UNPRI. N is actually a member of the Sovereign Engagement Working Group at UNPRI. And the green logo, the little hand, that is an NGO which is called Emerging Markets Investor Alliance, where we're working on fiscal transparency and sovereign accounting. That is very much related to what China is doing with the Road and Belt Initiative. And the reason why I'm showing that is that we are at a maturity stage where I think it's important that you bring these skills also into the team, into the, as Mario was outlining, into the PMs, integrating hand in hand. That is Olena actually being part of it, but you need to have an understanding on the PM side as well. So again, when you do, for instance, a selection in terms of emerging markets debt or any other product, I would also urge you to look at what are the credentials within the team actually, how much time is spent on this type of activities. Now, this is, I mean, this is actually where Marjo comes into the team, and as she said, we're expanding, ever expanding. So the 10 FTEs probably don't do adjusted right now anymore. And what we also have is fixed income trading. I just want to share an anecdote on what happened in fixed income trading and what it is when basically a company means ESG. So we had the head of fixed income trading coming over to me and asking, so how do you have any innovative ways actually or thoughts of how can we integrate ESG even in our trading activities? And we haven't gone there yet, but it's just simply the fact that you have the head of fixed income trading asking these type of questions tells you about the spirit, DNA or atmosphere that you have within an organization. We've seen the STAR slide before, so that's the combination of the sustainability type of analysis with the, let's say, what we do generally in terms of the old kind of model or analysis in terms of fundamentals where you combine the two, that is the STARS approach. I think the key, and Marjo also mentioned it in her presentation, but the key or one key element on the STARS is that we choose to use the non-ESG screened benchmark. So that basically when you buy, for instance, our EMD solution, it's competing in terms of performance at the same level as other offerings. So we're not making it the special benchmarks which do exist, and that flags a little bit our philosophy in the sense of that we're doing this for performance reasons. I can, other than mentioning that Marjo left out the countries, I can go relatively quickly over this slide. I mean, this is again the 3 value propositions that we have. I want to share a little bit of a practical example, though, on what does it actually mean and what are you doing in this space. And this is our sovereign data model. So where we're basically having an ESG proprietary model with different weighings, 17 factors, which we link to data that we identified on the back of academic studies as being materially important to explain the spread of the sovereign over US treasuries. And here we work together with a third-party data provider who helped us to analyze and map these spreads identical to these 17 factors. And then we come to the next slide, which is the outcome of this, which corresponds to the A, B, and C classification. So these are all the 80 MBIC countries that we have in our universe. And the dark blue area is on a data-driven approach, the countries that we are investing without any sort of, well, we always ask questions, but these are investable, let's say it this way. Then the middle space, are if you want to call them the B countries, these are investable only when we identify a positive ESG trajectory. So an improvement in governance, improvement in environmental or social. And the magenta colored or pink colors are the countries that we don't invest in. The reason why we don't invest in these countries is because over like a 3 to 5 year time horizon, we believe they're structurally exposed to ESG risk that is not easily manageable. So we're not predicting that, for instance, a country like Tajikistan, which is on this list, is now defaulting next year, but we're just thinking as an investor, this is not where you want to be structurally placed. Now, this slide, how we back test it, is also more on the risk side, not on the performance side. So what you see here is basically the distribution of returns or movements in the various spreads. And what we try to analyze and identify is, do the countries that we exclude actually exhibit fat tails? And when you exhibit fat tails, you would be drawn to more sudden shocks, which is related to the management of your ESG risks. So that's how we went to verify if we're on the right track here. We've heard about the Sustainable Development Goals. I will touch a little bit on the goal 13, which is climate, and I do that in the context of Brazil. Because what we do with any country that we invest in, independent of if it's in the dark blue category, light blue category, or in a pink category, is we have an ESG analysis. So we write down around 3 factors for the E component, for the S component, and for the G component that we want to monitor, right? I mean, that we basically want to be alert or aware of. In the case of Brazil, and on the left-hand side, all the way, you actually see granularity in our, it's a spider graph which shows in the pink area is what is an average country in the index and how does the country score on these bases and how does it develop. And this is Brazil. Brazil is actually doing well in the context of this analysis, but then we identified the various factors, and one of them was with the change of presidency that we will see that we could identify that the Amazon region will be used much more as an exploitable resource, and basically we will probably see an increase in the forest fires, and that has actually materialized. So we saw this risk materializing. Now, that in itself did not trigger our action. What did change our course of action, which we then took the choice of actually putting our investments in the bonds on hold, was when basically Macron, as the first politician, and at the G7 summit, all of a sudden we saw a shift of linking the trade deal between Brazil and Europe towards what happens in the forest fires. And then you get the effect that in the short term, of course, Brazil probably benefits from using the forest or the Amazon region basically as a resource, but in the longer time it's losing its trajectory also in relation to its trading partners. It's opening a different type of trade war, and it's basically not on a good economic trajectory through that. And that's the linkage where we had an environmental event with the economic downturn or economic impact. And when we did that, we weren't quiet about it. I think also, Mario also touched upon it. It's you need to have a little bit of transparency in this. I think it's for instance, one of the red flags you can check very quickly. Does your asset manager flag proxy voting? Does it publish actually its exclusion lag, where you can see, do they actually mean it, or are they doing it only behind closed doors? We communicated what we did in Brazil, and then we did get a call. We got a call from the embassy, actually. Nowadays, the Nordea Bank is based in Finland. So we got a call that actually the ministry that deals with agriculture locally would like to engage with us, have a dialogue and understand our decisions. Then it is great, again, to have an organization like Nordea, and where also our CEO means it, because I was thinking a little bit, am I in trouble? I mean, because we, of course, have also business interests in Brazil. And no, I wasn't. I mean, I had my CEO and Catarina, the head of Responsble Investment, co-head of Responsble Investment, with us taking this call and taking this dialogue. And then when we take the dialogue, basically, we try to... This is actually sometimes a bit of an uncomfortable spot for an asset manager, because we increasingly asked also political questions and value perspectives, and normally what our home turf is actually managing interests of our clients towards our outcomes. Here we were also asked, okay, to maneuver a situation where we're being perceived as the Nordic guys coming from the north with an opinion about what we're doing in Brazil. And we moved ourselves out of that territory, because that is not our starting point, by dialoguing about, can you please show us, because we didn't identify the lack or the deforestation. We saw the cause for it actually in the lack of enforcement of law, not in the law in itself. So we asked for figures, for instance, budget figures, how many policemen, how many government officials do you have working and enforcing your laws. What it triggered to is actually us next year very likely visiting on the ground to have further dialogues. Now, if you ask me, did we stop the forest fires? No, we didn't. I mean, that is also a bit of a very high ambition. But what we did do, in my mind, is we put the center of attention, or we shifted attention toward an issue that matters. Now, I can also share, it sometimes feels like being the first dad on parental leave, because some people cheer you on. Some people think, okay, why are you bringing Brazil into that position? Even my peer group, I mean, we for instance, there's yearly conferences at the IMF and World Bank. I mean, some of my old colleagues of my previous firms where I worked also asked me, but how come you did that with Brazil? I mean, can't we just have it as we had it? And that is the component where I mean that we are on the forefront of it, that yes, we need to embrace these issues, we need to find answers towards it, and that is actually what we want to do in this emerging markets debt team, move us into that territory. And now I think I'm almost being kicked off the stage, like the food is coming in. So I think somebody will ask in Spanish if you have questions. Probably not, as we all know what's waiting for us, but yeah.
¿Alguna pregunta? Si no, podéis aprovechar para preguntar.
Are there any questions? Otherwise, you can ask during the cocktail if you like. Any questions? No? Thank you.
Muchas gracias a todos y ahora pues estaremos encantados de disfrutar este cóctel con todos vosotros.
Now we are going to enjoy this wonderful cocktail. Thank you.